getting into the operational efficiencies, trying to figure all that out, looking to do those interior and exterior CapEx stuff. So that's basically going to run us over the first 6 to 12 months, right? It's really us establishing ourselves and establishing our processes so that we can drive that value back to you guys. Then we move to distribution. So again, the property cash flow is day one. We're doing distributions once a quarter. So that first quarter that rolls past after we take ownership of the property, you will start receiving those distributions. Step four is getting to that maturity. We've established ourselves, we're operating the property, we've done the CapEx, and now we've optimized that NOI so that we're driving that value back to you. We're stabilizing the property. It's really humming like a solid machine, and you're starting to see those returns, which we'll see on the next couple slides, really stabilize, and you'll start to see that projection, right? That's what we all want to see. We start out and we start going up that mountain. And then finally, realizing the value. So our goal, refinancing that at the 3-year mark. So that 18 to 36 months is where we'll start evaluating the property to see where we're at and our abilities to be able to refinance that, get that capital distribution back to you guys, evaluating what we're gonna do with the property essentially, and where the market's at, and then overall the ultimate goal is to sell the property in that 5 to 7 year mark. We say 5 to 7 years because we don't know the future. We don't know what the market looks like. Every market has a cycle up and down and up and down. We are in probably the perfect spot to be investing, where we're kind of on that upward swing. We've hit the bottom in 25 and it's kind of working its way up. So this is like, if you're talking about investing and want to do it, this is your opportunity too, because it's like they tell you in the stock market, you buy low, you sell high. So that's the goal here. So this is kind of like a sources and uses slide. So it tells you what we're doing with the fund. So again, 14.9 million purchase price. We're looking to raise 6.3 million. Like I said before, you guys are going to get paid. We don't get paid unless you get paid. Our leverage is LTV of 70/30. So again, very conservative on how much leverage we have on the property, and that's purposeful so we don't put ourselves in a bad position. Because again, we're securing your capital, we're reducing that risk. It is already a Class B stabilized multifamily asset. So again, we're purchasing something that we can help drive down the expenses and really optimize the NOI and the property overall. The minimum investment is 50K, and we'll talk about that in a little bit, but we're looking to get 50K minimum investment from folks. And then over here is the uses of the funds. Majority of it is purchasing the property. There's going to be operating reserves, so then that's kept on the side so that, if anything happens, we'll have some reserves to be able to tap into. The capital improvements is going to take up 15%, and then just transactions, closing costs. We've all sold houses. There's closing costs involved. There's things that have to get just paid out based on purchasing a property in general. So the best slide, right? The returns. So this is what we're looking at. Based on a 5-year hold. So if we hold the property for 5 years, these are the average projected returns. So cash on cash is going to be somewhere between 7 and 8%, with a return on investment of 23 to 26%.